I had an extra meal one time because I felt like I needed it. Like I felt like I absolutely needed it. And just to give myself peace of mind, I just had a cup of broccoli and half a stick of butter melted over top of it. And yes, that's a lot of butter, but it's a fat and it's healthy. And you actually need butter because what's in butter actually is the only thing that gives you health, coating inside of your intestine. We we don't produce it. You can't get it from anything else. It actually comes from butter. So if I'm not mistaken, I think it's called butyrate, but it comes from butter, not margarine. Don't eat margarine. That's not butter. And anything that sounds like it comes out of the crock, what's it called? The crock shed or shed crock. Something it's in a grate tub. When we were younger, my mom would put leftover spaghetti in it. They used to be Saturday mornings cereal bowls for me. Country crock, I think is what it's called. That's not butter. And I can't believe it's not butter. It's not. Don't eat it. So anything margarine, don't eat that stuff. When you go to movies, that's not butter. Don't get butter popcorn.
What's up mga boss?
Margarine. And it's garbage. And it's wrecking your body all terribly. So that's why I had to get a house that had a theater in it. Because I like watching movies. I like popcorn. You can eat it. It's safe. It doesn't hurt you. And I put lots and lots of butter on it. I've always ate it, by the way. And it's good for you. Bottom line, it's good for you. And then once in a while, I'll shade up the chicken in the morning to eggs. I'll have 4 eggs scrambled up. That's it. That's all there is to it. I don't have any kind of snacks, no snacking, no nothing, no fruit and vegetables in between meals. Just that. And I am fit. Like I'm fit. I'm sitting at 190. My body is tight. My flexibility is coming back. I have no back inflammation at all. 0. None. And that's the first time it's felt like that since 2009 when I wrecked myself on the motorcycle. March 9th of 2009. 1:30 in the afternoon. That was the day I probably should have checked out, but the Lord said, not today. But I've been living with chronic pain since that day, and it's been getting worse and worse and worse. But after 2 months, it went away. 2 months of living with a different lifestyle of how I'm choosing when to eat and how long I'm sleeping completely changed everything. My ability to spend time in the charts is far more focused and clear now than it's ever been. And I just want to inspire you to just take a look at it. I think you're going to find that once you get to this position where you're taking everything out of your system that is not good for you, you're purging it all. Nothing in my body is artificial. No artificial colorings, no artificial sweeteners, no preservatives, none. And it's been a game changer for me. Like for me, I feel like I'm 15 years younger. And when you're 53, that's saying something. So I hope that I've given you something to consider working towards today. I probably bored a lot of you younger folks, and that's okay. I'll be able to live with myself with that. But if you've been wrestling with a lot of anxiety and stress, or having a hard time to rest, if you've been racing with thoughts all the time, I lived that way for a long, long, long time, and I believe I think it's something they put in our food, man. Like I hate to say it, but I think it's intentional. And when you take all that stuff away and any possibility from it getting into your system, it changes everything. Like it changes your ability to think clearly. Your decision making isn't clouded, and maybe some of you will take the initiative and try it. It isn't going to hurt you. If anything, it's going to make you better. It's going to make you healthy. And I'm trying to encourage that because I care about all of you. If I didn't care, I wouldn't talk to you. I wouldn't spend my free time doing this. I mean, you're all going to put this stuff on your YouTube channel. I'm not doing it. I'm not monetizing it. So what's the motivation? I have sincerity between, what it is I want to talk to you about and what my goal is for you to have with it. And it's wellness. That's all. It's not simply enough to make money in the marketplace. You want to be able to live a long, healthy life. And And up until recently, I've had that. I've been blessed. But having a health scare is scary, especially when you're entering the years that I'm entering in. I'm entering the end of the warranty years. Okay, so once we get to those years, it's like, well, anything can happen, right? So you want to give yourself all the advantages possible. But if you start living your life young like that, wow, how many years can you potentially add to it? And the importance of having a very low stress life is crucial, especially as a trader, because it is stressful. You are going to have a stress-filled life as a trader, unless you do two things. Number one, know exactly what you're doing, when you're going to do it, how you're going to do it, why you're going to do it. And you're comfortable with doing it wrong once in a while, and you have the discipline to say, I didn't do something right. I'm not going to allow my flesh to push me into something I'm not required to do at the time, which is get the money back right now. Take the loss and give yourself permission to be imperfect. Not, I'm going to be a good loser today. No, you're not a loser. You're imperfect. You can flourish being imperfect. You can make millions of dollars being imperfect. Okay? But when you dial in on the words like, I'm gonna call myself a good loser. No. I don't let those kinds of thoughts in my head. I don't let that happen. You shouldn't either. All you're doing is making a small little deviation from calling something that subconsciously will trigger fear, anxiety, guarding. You'll be more concerned about the outcome of everything because you now increase the level of importance because the last time you took a trade, you were a loser. That
Yo,
was a
good evening,
loss.
boss. Sean
They're going to come. You're going to have
Michael.
losing trades. I'm not trying to say that it's not reality. It is
Good evening,
reality.
boss. Good evening.
But it's important for you to hold a mindset and a perception around these things that are inevitable and constantly remind yourself that that is part of this whole lifestyle that you're trying to be a part of. You're trying to adopt the most stressful, the most performance oriented career. You're trying to be an entrepreneur in the hardest thing in the world, undercapitalized against the hardest opponents in the world in a game that's rigged. So think about that, because that's the real textbook response to what is trading like and what's it like for someone that gets involved. That's it. Now, the first time someone sat down with you, he said, "What are you looking at? I'm looking at these charts. For what?" And they gave you that definition of what it is. Do you want to subscribe to that? Heck no. You're going to question yourself even more why they're even worried about doing it. So what is it? It's the money, right? No, it's not the money. It's the significance that you get doing it well, and the money is the bonus. That's the evidence to people that doubt you. Look at what I got. But that's not why you're doing it. Not why anybody does it. They want to feel empowered. They want to be able to look at someone eye to eye and say, you aren't better than me. Don't talk down to me. Don't tell me to report to work anymore because I'm not coming. That's what they want. They want power. And you can acquire that in this craft. But this craft requires a lot of work and effort. And you got to work hard on yourself first. The easy parts is the trading. And the reason why it feels so hard and complicated, the reason why you're struggling, the reason why you can't get it, here's the secret, and I'm going to close it. You haven't worked through your own problems yet. You're so busy putting out fires or hiding them from yourself and everyone else around you that you can't think straight. You can't think straight. All these things I talk about, you're looking for an easy distraction from the things that you're putting yourself through. I hope you would teach a new model. I hope you would. Why? You already have everything. You aren't doing well with what you've already been given. Why do you want more? Why? Because you want distraction from your inability to identify your personal faults, weaknesses, and shortcomings. And everybody has them. There's no shortage of people in the world with the same types of problems that you have. You're imperfect. You're perfectly imperfect. But you're wrestling through this world trying to hold on to things that you need to simply let go and put down. Things something probably hurt you years ago. Staying in a relationship that's toxic. Trying to live up to the expectations of people that don't matter. Think about it. You're trying to impress people that don't care. You're trying to prove that you have things that these people that you don't even like can't afford. Where's the motivation there? What's the point? Who cares if you made $1 million? Who cares if you went out there and bought a whole army of cars and drove them down the block and parked it right in front of their house and said, see this? Once they see it, that's it. It's over. It's done. Your life has to mean more than simple things like that. They're shallow. So you have to purge your body, purge your thought process of all these toxic thinkings, and identify the things that's holding you back. I want you to really be honest with yourself. What is it that's messing you up? That makes you impulsive? That makes you want to push a trade on when there's no real reason to do so? What's the real thing? It's not that you want to make the money or get the payout. You want that for some other external reason. What is that? Because that's the root thing that makes you tick. That's the why. And that why needs to be wholesome. That why you're doing it needs to make sense. It can't be emotionally anchored. It has to be principally oriented. What does that mean? It's got to matter more than just superficially. It's got to matter more than right now. This is stimuli. Show the world that I made this much money. That's irrelevant. Nobody cares how much I have. Nobody cares what anybody else has. Once the number's revealed, wow. On to the next one. Who else is going to show what they made today? Who else is going to show what they took a loss on? Who else is going to feel like they did it wrong? That's what social media is cultivating in all of us. Constant stimuli. Something inside of you that's toxic, you're trying to get stimuli from that. That's what it is. That's what's holding you back. And the things that's holding you back are going to be ugly. They're the things that you don't want nobody to know about you. It would embarrass you. It would shame you. It makes you sick when you think about it because you know exactly what I'm talking about with you. Maybe it's something you did, should have done, but didn't do. Whatever it is, you gotta put it down. Forgive yourself. Say, okay, I wasn't in a good place at that time when I did those things. I got people I call friends right now, and I'm trying to impress them and rushing through this process, and they're probably not really my friend. Let's test that theory. Cut them off for a little while. Isolate yourself. Build yourself up. If they're still your friends, they're going to be thankful that you came back and hang around with them. And they're going to be excited that you've done well for yourself. You ever think about it that way? Chances are you probably didn't. Because I didn't think that way. I wish I would have had somebody that I cared enough to listen to like you're doing right now. I wish I would have had someone talk to me like this. Because I needed it. I needed a counselor of some kind. Like I needed someone to give me direction, to remind me that I wasn't losing my mind. I needed it, and I didn't have it. I would have paid.
Set alarm 9:15.
It was made available to me. And because I believe it matters, I believe it's the truth, I believe it's helpful, I believe it's going to impact you positively if you really do the work of this breaking down yourself. Tear yourself down internally and think, why do I do what I do? And tell that answer to yourself in the journal. And I promise you, you're probably going to weep. You're going to feel disgusted writing it out, and you're going to be afraid that someone might find this. Doesn't matter. Pour yourself out in that journal. It's good medicine. It's the best thing that you could do for yourself, because you're going to find something inside of you that's the real root problem. And you keep picking at it. Like a scab. You won't let it heal. It's festering like an infection. And it's constantly making you impulsive. It's constantly making you self-doubt. It's constantly standing in the way of where you're trying to get to. And you have to conquer it. You have to cut it out like cancer. Because it's plaguing your development, and it's going to undermine your success. It's definitely going to defer your success. So you have to cut it out. But you've got to know what it is so you can identify it and then say, okay, it's a problem relationship. It's substance abuse. It's self-loathing, feeling like I don't deserve it. Who said that you don't deserve this? Who's told you that you don't deserve this? All of you deserve this. You all deserve a good, healthy, well-lived life that puts you in a position where you can bless other people. Who, even God, couldn't even come down here and tell you that you don't deserve that.
Yes, sir. Yes, sir.
So why do you feel that way? Something's broken. And all you have to do is identify it and give yourself permission to heal and time to do so. And then take all your attention away from that toxic thinking and pour it into self-improvement by doing these exercises. If all your focus is genuinely in doing this and not looking for the reward monetarily, not the immediate gratification that, oh, I'm learning how to do this, I'm going to make money real fast. I know if I do it his way, I'll probably be a better trader, but if I can start making money, I got time. I'll just be slower at getting better at it, but at least I'm making money. Wrong. You're lying to yourself. I'm telling you, if you're thinking that way, you are lying to yourself and you're setting yourself up for failure. You're going to cause yourself to feel like you got to do more that's necessary, more often than is necessary. None of you probably can consider the idea of just taking one setup per week and being content with that, and living there for a couple months. No way I could do that. Come on, ICT. You're being unreasonable now. No, I'm not. Because someone that has conquered themselves with no baggage could prove to themselves that they have discipline, that they have forged a measure of self-control, that they could do that and show no impulsiveness, no impatience, no need to do more. Because they know after 2 months, they can resume doing whatever they wanted to do. And it was nothing but proving discipline, forging self-control, purging the impulses of the flesh, you wanting to do because you got time to do it. And in measuring the level of stress that you have endured versus what you're trying to put yourself through all the time. I promise you, you're trying to do more than what's necessary. And that is causing stress. And stress releases cortisol.
Let's test your trading
And cortisol
skills.
causes your body symptoms. You start feeling tingly. You get anxious. Your breathing, your breath elevates in frequency. And a faster breath causes a faster heart rate. And a faster heart rate causes more stress hormones. And left like that, nobody can think clearly like that. No one can. So why are you trying to risk a lot of money doing it? because no one sat down with you and told you that it's wrong. No one's cared enough to tell you that that is a better way of doing it. There's a way that you can do this stuff and not be stressed out. There's a way to do this and be consistently profitable and not worry about the outcome. Because the process is the model being applied with a sane, sober approach with no stress. Stress-free trading. You're not trying to win Robin's Cup. You're not trying to be on a leaderboard. You're not trying to beat the last guy's payout. You're not trying to be the #1 person followed on the internet. You're simply trying to make more than you have right now with no stress. And measure how you feel about that. What are you contemplating? What are you worrying about? What is the positive things that you're feeling right now? What are you hopeful for? All these things are KPIs. They're key performance indicators. And you put that stuff in written format in a journal that you alone read. And you refer back to it. And then you give yourself a little bit more of a threshold to reach for. That means if you're trying to make $250 in a game per week, now reach for $300 or $350 per week. And you gradually, slowly increase that. Not, well, I went to the gym and I'm like, I'm gonna get what's my heaviest lift I can do in weight. All right, I'm gonna do 80% of that and start working out. Man, you're tearing yourself up. You're causing growth to be deferred, and you're hurting yourself. That's not how you work out properly. Now I know some YouTube heads are come at me and say, bro, you don't even work out. You're gonna come at me and do all this. You don't want me breaking out pictures of you when I was 19. I'll put you all on welfare, okay, straight up. So the bottom line is this. In closing, I want you to live a well-lived life. I want you to be healthy. I want you to feel confident about what you're doing, but not overconfident, not arrogant, not conceitedness, not narcissism. I want you to not worry about the opinions of others, least of which mine. If you're asking me to critique your work, you're already making mistakes. I'm not in the business of doing that. I'm trying to do it too. And you should not be doing that. You're looking for needless things. The whole point of you being here is to learn how to not be tethered to anyone. And I'm the first person on that list not to be tethered to. You want to be an independent thinker without any stress, living a very long and healthy life. And you want to be able to move through these marketplaces without any degree of stress. And this is the process you go through. You start with you. And so many people, and you know who they are. They're the people that come at us, me specifically, and they're toxic. You know beyond a shadow of doubt, they're not comfortable during this game. I'm not going around looking at everybody that says anything positive about themselves saying, you're a wreck. And I have reason I can do it. I can look down on everybody else out there. I could. But that's not what I do. I don't want to do this. I look down on everybody else. Very method because it's material, it's mine. And that sounds narcissistic. That sounds arrogant. But it's facts. I would never leave what I'm using to go and do anything else. And when you get good at using it, knowing what it is it's capable of doing in your own hands, you will never say that way either. It would be nonsense. It would be ludicrous to do that. No, I don't want to know. I don't want to know what the market's going to do now. Okay, I'm not going to do that. Okay. So I wanted you to just be reminded before we go on our holiday break that the time that you spend away from me bloviating into these types of things or on my videos, I want you to think about how you can build up yourself. Take the time, and it'll be close to about 90 days before I resume in February, Lord willing. Try to do those types of things I've talked about here, or make a conscious effort to try to work towards it. Reducing anything that's not good for you is a good thing. And see if you don't notice a difference in stress. You're going to wake up one day and it's going to feel like, wow, my mind is not racing. I'm not breathing as fast as I used to do when I used to put these trades on. I'd be like, if you have those Fitbit little bands and such on your wrist measuring your elevated heart rate, you're going to find that your heart rate ain't doing anything. You're calm. I would love, I've seen Traced by Matt. He had it there for a little while. I heard Tom Fugard mention he had a low heart rate a few times. Tom, with all due respect, I really want to call you on this one because I've listened to you, and some of that is actually the live streams that you were doing, where you're actually taking the positions you're trading it, you're doing it in front of everybody, and there's nobody can say anything bad about that. But you said that you had a 50 heart rate, but you seemed disgusted about something at the same time. I don't think that's possible. If anything, there was small little spurts of increased elevations in your heart rate. So I would love for live streamers, like wouldn't you love to see Patrick Whelan to have his heart rate monitor on there and let him, I don't watch this stuff anymore since it's gotten real toxic, but people like him. And you got this real cool cat like Matt Miller, Traced by Matt, fun account, code TBM, by the way. You're welcome, man. It's 2 times. You're going to owe me some kickbacks. Christmas time. Don't forget me, bro. So, the difference between those two, really, really laid back versus crank. Oh, 100 miles an hour nonstop, drinking energy drinks and whatnot, being crazed out of his mind. I would love to see a heart rate monitor on both of them and then trade their largest comfortable size. And the information feedback that would come from that would be illuminating. Number one, you probably would see Patrick's heart rate already crazily elevated anyway. And Matt probably would chill. And probably go up to about 100 or so and put size on it. But you probably see like 130 on Patrick. You can't do well in that environment. It's stressful. You can't think clearly. You will not be comfortable in the trade. You won't be comfortable in the trade. And if you watch him, you'll see he's never comfortable in the trade. And it's not a knock against him. It's just something that I think if he does things like this and starts investigating his own thought process and the things he does, I think it would be beneficial. It would help him prune all the things he's doing and try to make him better. And I know it would make him better. And what do you think that would do for yourself? If you said to yourself, I'm going to focus on lowering stress-inducing things, filtering a lot of this kind of stuff, not putting myself in situations where it's going to be high stress, not placing all this extra effort that's required to get through something that you want to be doing in private. Your speculation, what you're doing with your money, how you're risking, how you're entering, what mode of trading you're using, whether you my stuff. I have people listening to me, they never even trade my stuff. They just like to listen to me talk about these types of things, the psychological things. And I got respect for that. That's cool. You don't have to use my stuff. I'm just biased with it because it's mine. But I think that if you were to be honest with yourself and look at what you do constantly to yourself, you probably make it a whole lot harder on you than it's necessary. You don't have to make it an Olympic feat. But that's what social media turns it into. You get caught in these traps. You got to win the competitions. You got to get on the leaderboard. Who said that? Are you able to make money and not have to go to work? Because that's really winning. If anybody hasn't said it's lazy, let me be the guy to talk about it. When you don't have to work anymore, that's winning.
Ouch.
That is winning. I don't care what anybody says about that. That's winning. And when you get to that part of your life where you're able to do that, and you can do it from your own hands and the effort you put forward in your trading, you're not going to care if anybody agrees with you or not. You won't care what anybody else thinks. You're not going to go around looking for arguments either. But when someone steps to you and says, oh, you can't do this, you really care what people think. You're not going to. And you live a stress-free life. You laugh at them, and you smile, and you wave. Because they're not of any importance to you. It came there to try to distract and derail you. And who cares? If you know you're living your life, you're living in your world, that's the reality. reality of what you're doing. These perceived ideas of what you're never going to be able to achieve, those are opinions of people that are failures. They have failed already, and they want to allow the enemy to enter their mouth and tell you you're going to fail. And that's a lie, because the devil is a liar. So I hope this holiday season you have a blessed one, that you're healthy, and you come back next year, and Lord willing, if I'm able to do so, I'll have a whole new batch of whatever it is I'm going to be sharing with y'all. But I want you to have a very relaxing, enjoyable holiday season. You make it memorable, and I'm sure I'll be able to say my holiday spirits and wish and cheer and all that, and give an opportunity on X and whatnot. But if I don't get the chance to say it, happy Thanksgiving, Merry Christmas, and Happy New Year.
Merry Christmas and a Happy New Year.
Can you hear me?
Yes, sir.
Good afternoon. Good afternoon. All right. So I was listening to you. The information that you supplied so far, it seems a little incomplete. So I'll give you from what I gathered in your description. You're looking at a sell-side imbalance, buy-side inefficiency. The lower half has had back and forth delivery. No candles are left in the upper half of it, so it's qualifying itself as the market's heavy. And my understanding is you're asking how I would interpret the open portion that's still only sell-side delivery, no buy-side's been offered. Would I anticipate that? How would I anticipate that being used? It's in deference to where you're at for the range you're trading in. And let me frame this out so that way it's going to be hopefully complementary to what your other listeners will understand from it as well. Just simply because there's a SIBI and the upper portion is crossed over to the downside, so there's a down close candle there. The longest separation with one single candle is only being left in the upper half of the SIBI. Wonderful, easy. The bottom half is showing its willingness to be heavy, as you would expect when you see order flows suggesting that. And that means if price were to trade up into that, I want to see a wick form, not completely close it in. It would be institutional order flow entry drill only, listen now, only if we're at 50% or below the targeted range. So if you have an implied dealing range, when you're trading a short or a long, your target, and from where you enter, that range that price is going to traverse, if you're correct, that range should be greater. So you don't put your fair line, so 25% of the range, 50% of the range, 75% of the range, and then terminus, where you think it's going to go to target-wise. If you're shorting, institutional order flow entry drill, many times it's going to form at 50%, or basically equilibrium, of the implied dealing range, or somewhere between that and the lower quadrant, because it's got some place to go. A full return back up in that exposed area can occur in the early portion or upper quadrant to just above equilibrium of the implied dealing range that's bearish if you're trying to be part of if you're getting short. If it's above the initial upper quadrant, I want to see that stay completely open, have no portion closed in at all, and that would be a breakaway gap. Does that answer your question?
So just to be clear, the we're on the same page. So we have a SIBI on the 15th. The lower half has a back and forth up and down price action, and the upper half is a very one directional. There's no back and forth price action. If we see that and we're correct and on the direction, yada yada, if price returns above that 50% point or the consequent encroachment of that 50-minute SIBI, we only want to see a wick go up into it, and if we see a body laid up into that, are you saying that would invalidate the correct
say, and I didn't imply that at all. I gave you specific references by grade. In other words, before you're even considering that city for any purpose at all, you have to have a drawing. Where's the market going to go? And that's the beginning basis of having a trade idea anyway. You gotta predict. You gotta predict where it's likely to reach for, because everybody that says that you're not trading a measure of prediction is literally arguing through semantics. You have to know where you're targeting between where you're entering long or short. In this case, you're framing an idea. What I gathered was something bearish. If that's the case, we can't just limit our focus to just simply there's the PV array. This is one of those things ICT talks about. It's a fair value gap. It's a city. It's performing a certain function there. The lower half of it's seeing back and forth busy work with the candles, and there's never been any kind of body laid in the upper half. Before you worry about all of the details, the minutia of what that means, you have to know where that fair value gap is forming in proximity to where you think the overall market's going to draw to a longer scale. So don't just look at, in other words, the fair value gap is not the model. It's not the target. It's not the stop management. It's just one component. It's a mile marker. So if you're bearish, if you're in the upper quadrant of where you think price is ultimately going to go to, I gave you very specific rule-based ideas to frame out the usefulness of such a city. If it's already giving you heaviness and the bodies are staying in the lower half of this, so constant encouragement to the lower half of that city has seen candles laid inside of it, but it's not yet traversed into the upper half of that city. So in other words, we still have what would be a smaller little city now, right? Am I understanding what you're trying to ask me?
Do you know what video I'm talking about?
Sir, I asked a very simple question. To get through your question, I asked something to make sure that one single candlestick that's laid in the upper half of the city, doesn't that in itself make another smaller sell-time balance, buy-time efficiency, or city? Yes?
Yes.
Okay. Now, the overall placement of that formation and price action, if you think that price is going to drop down another 100 handles, or we'll just keep it easy, say it's going to drop 100 handles from that area. If it's forming that, there's a likelihood that it's going to act as a breakaway gap, and there should be no expectation on seeing any complete closure of that. So it could be an institutional order flow entry drill there, but you want to see it stay open for the benefit of it being a breakaway gap. That's going to be further confidence that it's heavy, it wants to go lower, you can't even go back and fill that in. You don't anticipate that happening, okay, on every scale or quadrant of the implied dealing range, where you think it's going to go to ultimately. In other words, in this hypothetical example, it's got 100 handles still potentially that can drop. Now, if it's doing this formation around 50 handles of what would be expected as a 100-handle drop, it's already moved half of what would be reasonable in terms of the trade whole term is moved. So the rules I gave you were based on that understanding. Just because there's a formation of a fair value gap, if you just simply look at it that way, you're robbing yourself of the understanding that there's a place, a time and place for these inefficiencies to stay open. And there's a strong likelihood that they will completely fill in. That's going to be around equilibrium, because you can go back and forth at equilibrium. Time distortion can enter the marketplace. It could be, it closes near the middle of the range for that day, and it's also can consolidate there, and then it'll resume the following day, or after 6 p.m. startup, or whatever it is. If it's a Friday, you have to wait till the Sunday open. All these factors have to be assumed as part of the equation. Simply just saying, just because it does this one function of leaving the little portion here, would I expect it to be this, that, and the other thing? There's other things that you didn't mention, and even when I mentioned it, it's like you sidestepped it and you were asking me about a video. Forget the video. The whole conversation was what you just framed here. So I'm answering your question. I'm giving you a very direct response, but it's like you're looking for something else. Maybe you're looking to be confirming an idea or close, when they should completely close in, and it still doesn't undermine the fact that it's going to go lower. Does that help at all? Because if it does, that's the best I got for right now.
Yeah. I will read back. I will read it.
Yes. I think that's the best.
Thank you, Michael. Thank you, Michael.
You're welcome. Thank you.
Michael, one quick question I had from the community here, and I thought it was a very good question, but the question was, how many open ranges are there? Like, that we should concern ourselves with? I don't know. I thought that was a good question.
Well, how many trading sessions have I thought about?
Well, the three kill zones, right? Yeah.
Well, you have Asian, you have New York midnight. Okay, so that's trading new true day. Okay, so that's 2. Then you have London Open. That's 3. Then you have New York Open. 4. Then you have the equities, 9:30 to 10 o'clock opening. Then you have the 1:30 in the afternoon PM session. So how many is that?
6.
There you go.
Beautiful. I love it. I think that was a good question for what it's worth. Yeah. Someone asked that question. Yeah, the follow-up question to that, and this is coming from one of your charters again. Just I'm perusing through some of these questions, but the question was: are there specific high time frame open ranges that one might concern themselves with? I mean, you mentioned the 2 o'clock one. I personally thought of that as kind of a harmonic kind of high time frame range myself. But how many high time frame ranges? Like you mentioned the 6 opening ranges that are really salient within your kill zones, and the follow-up question was: are there any high time frame open ranges that one might concern themselves with?
Not specifically like we're delving into it with the intraday perspective of it. I think if anything outside of intraday, you're gonna have to go to a new day opening gap, new week opening gap, and just use the premise that those supply, and that's ample. If you're discovering, if the person's asking it and they're discovering things on their own, that's wonderful. But I'm saying that I don't have anything beyond that.
No, that's wonderful. I think you answered it fantastically. We've got our hands up. I've got my fingers crossed. We're going to hold our breath. I hope we get a intelligent question that is worthy of the conversation here. You never know with with these conversations. So, hand up. I'm going to go with the trades by the first. He's got his hand up. We're going to go then to Hunting the Wick as well as Market Oracle. 3 folks who have their hands up. And then my boy Focused as well. But do you mind, do you have a question for Michael?
Yes. So my name is D from Nairobi, Kenya. First and foremost, before I make my question to you, Michael, just to appreciate you for the immense contribution you've made to the community.
Fight Club rules. Fight Club rules.
Okay. Sorry, kid. So my question to you, Michael, I was watching your breakdown yesterday, and you were talking about first stage accumulation, second stage redistribution, and got me thinking because I've been looking at it for a very long time, and I wanted to know how do we measure in terms of how much the price is going to retrace in terms of the reaccumulation, and how deep it's going to retrace before we have the second stage distribution. So just a simple question. Thank you, sir.
Okay. When you're looking at, well, let's frame a hypothetical example. Say we're bullish. We're looking at a 15-minute time frame, and say it's the Nasdaq. It could be any market, but say just for the purposes of mapping it out, because we don't have a whiteboard here, and I'm not over top of the chart. It's a 15-minute time frame. It's Nasdaq, and it's traded down to a old weekly low. It's already repelled away from that. It's traversed higher. It's gone back up above the high in the last 3 days. So we've already seen purge and revert. Not that has to happen. You could still be waiting for that to happen. But when it creates the inversion fair value gap on the dive down below the weekly low that it took, their sell side has been engaged, and the market has showed a willingness to want to go higher. If the gap, in this case it would be a SIBI, forms on the leg down before the stop hunt below the weekly low, once that forms, if price goes back above that, you want to see that always always act as an inversion fair value gap. If the market doesn't come back to that and still keeps going higher, it can stay open. It doesn't have to trade back to it, but if it does, it must act as an inversion fair value gap. If it fails, then you have to abandon the bullishness until it proves it again. That means you have to make another lower low. The retracement question you had, how far would it retrace? It needs to stay obviously above that inversion fair value gap because it's a market maker buy model that's forming there. If you understand the schematic I outlined for the market maker buy and sell model, these retracements in the smart money reversal, the low risk entry, that low risk entry has to form above the turtle soup buy below the sell side liquidity that was taken in the weekly chart. So now you have two pieces of the puzzle right there. So now, would you expect first stage accumulation, which would be the most deepest retracement that forms after it runs up a little bit in price, would you expect that to trade down into the same area that the low risk entry would be?
No.
Right. So to answer your question is they have to stair step up. The smart money reversal has to be the low. The curve starts on the buy side now. Then you have the lowest entry, and then the first stage accumulation will trade down into a PDA, right? Fair value gap, inversion fair value gap, something to that effect. That's going to form higher than the low risk entry. Then once that first stage accumulation forms, when it rallies, the second stage reaccumulation cannot share the same space that the first stage accumulation took place. So it's just a stair step, higher and higher and higher. So it's all based on the scale in which where these things fall in line on the price action at the time you're looking at it. But they cannot share the same space. They have to be higher each time. But it's building without drawing trend lines, without building support resistance ideas. It's simply stair stepping higher and higher and higher. And it becomes an obvious mechanism to anticipate where this next price leg is going to form. In the second stage, accumulation or reaccumulation will be the biggest driver higher, and it doesn't spend that much time down there. The first stage accumulation can stay around a little bit, hang around a little bit, and maybe do another little whip into its first low, but not share the same space of.
Yo, what's up, mga boss?
The second stage reaccumulation
What's up,
is a
what's up,
one
what's
and
up?
done, out the door, goodbye. Elvis has left the building. How much it retraces is all ceiling to what is in the chart you're just looking at the time. It just simply can't share the same space.
Okay, thank you.
You're welcome.
So meron tayong NFP mamaya, mga boss.
Absolutely wonderful. Follow up, another question. Market Oracle, you're up next. Then we're going to hear from Focus.
Hello, Kate. How are you doing? And hi, Michael. Am I
Yes,
audible
sir.
now,
We can
everyone?
hear you loud and clear.
Thank you, Kate, for confirming. First of all, I would like to congratulate and relieve myself of this. Like the thing ICT shared that he's doing better on the health basis. I am really glad to hear that and wish you a great health and prosperity for you and your family.
Well said, Market Oracle. Please continue.
So my question is that is related to the technical aspects of the market. Like there are market maker buy models and there are market maker sell models. Is there, I mean, I don't want to pry on this, but if you are comfortable sharing, are there any other market maker models which you are yet to make public, or are we going to see this in coming months, or through your books or your next mentorship series that is going to be in 2026 when you come back from holidays in February?
So the question is, are you going to build onto the market maker model in any other way, Michael?
I took it as I thought he was asking if I'm going to create another teaching series where I'm revealing other models or profiles and such. I don't anticipate doing that because, in my opinion, I wish I wouldn't have revealed as many, not because I'm trying to be selfish, but I think I gave too much too quick, and people being who we are in human nature, it's just we don't give it enough time to gel, to acclimate ourselves to it. I think the daily profiles, the weekly profiles, and the market maker profile buy and sell ample. I don't. I do have other profiles, and some of them can be viewed, and I would readily admit they are very complex. They're uh, very specific around conditions, and they're not as useful as a universal. That's why I taught in private mentorship the the universal nature of trading with these market maker buy and sell models. That you just can pick whatever part you see forming next. Once you understand what they are and how they form in price action, if you can work through the time frames, top down, bottom up, whatever way you want to go about it, if you can recognize where it's going to draw to, where are you at based on what price is done with the market maker buy or sell model, and then plug in play. There you go. This is what it's going to do. It's going to create a low risk entry because it's already done a run on liquidity. It's giving me the obvious inversion fair value gap. If there is no inversion fair value gap, then it's the first fair value gap that forms. And then that first retracing down into it, that's the low risk entry. That's simply model 2022. The application of the first stage accumulation, that's simply an optimal trade entry. It's an OTE, that's all it is. And the same thing for the second stage reaccumulation. It's another optimal trade entry. They're small little cookie cutters placed in there. So I don't believe that I should have any desire for another spin of different models because I've given a plethora, a whole lifetime of just wonderful opportunities for anyone to go in there and just plug and play, plug it in. This is what I think is going to happen to us next. If this is going to draw up to an old high, or it's going to draw down to an old low, and that's the draw. But as I taught yesterday, you know, as a chart member, you know, we talked about this where the market maker buy model and sell model, they don't have to complete by going to the original consolidation. A market maker buy model can form in a bearish market, and not simply because there's relatively equal highs doesn't mean it's going to go up there and clear that and fulfill a classic market maker buy model. It will go up 70.5, which is the sweet spot, and only complete that much of a retracement, leave those relatively equal highs there. Why? Why would it do that? Because it's part of an underlyingly bearish market overall. So our expectations would be muted to only expect 3/4 of the retracement, and that's our objective, not the original consolidation. So I think if you're honest, I think you'll agree that you have plenty, and you have a whole lifetime of looking for ways to use what you already have. You have a wonderful array of tools and applications to find whatever it is you want to carve out as an income. Sounds like a sales pitch or
Of
something.
course, Michael, I agree.
But to your point, Michael, I mean, the model, we have upward models and downward models, right? I mean, ultimately the market is going up and it's going down. So we have upward models and downward models, and it's up to us to, again, if we're going to mitigate or eliminate being in a range or a compression, a balance, whatever you want to call it, an accumulation, then you either want to be formulating and simulating price upward models or downward models. There's really only two models that you've taught, really, and identifying the range, right? I mean,
yeah. I mean, you're either looking for the rate on the liquidity, and that's the sell side of the market maker buy model. You're on the sell side of the curve, and that's pretty easy. They're pretty straight line and go down and hit the liquidity. But it takes confidence and experience to then anticipate that return back into that range to the degree of whether it's going to completely go all the way back to the original drop point, or what we consider the original consolidation of a market maker buy model, or if it's going to go like I taught yesterday, where it only goes to 70.5, which is the 3/4 of that range, and needing to go and not needing to go any higher than that. So no matter you understand where it's going to draw to next, then simply think in terms of that market maker buy or sell model. Where is those points of reference? The first accumulation, second stage of reaccumulation, the low risk entry, smart money reversal, then going back into the sell side of the curve of a market maker buy model, going to the left side of it. Then you have the second stage distribution, first stage distribution, low risk entry, and then back to consolidation. Everything is backwards and forwards, whether you look at markets bullish or bearish. That schematic, that expectancy of price action, how it delivers, will allow you, if you really understand what it is that's been shown, you'll be able to trade any time frame, any market, and you'll know what it should be reaching for, and you can do it in smaller modular components, and you need not be able to have the whole move lower and the whole move up, just small little pieces of it, and over time you'll get better at it and you'll be able to do the whole thing.
Sauce. We like to refer to that as sauce here at Trader Roundup, ladies and gentlemen. Focus has got his hand up next.
Yes, please.
Market Oracle, I hope that answered your question. I'm pretty sure it did.
Of course it did. Of course it did. And we really do have a lot of things to trade upon and view the market and do our technical analysis on like where it is going to go. Michael has made it really clear. There is nothing left that we can ask from Michael, and
it was still a good question. I like the question. I thought it was a good question. So, I mean, it's a good question.
It's been asked before by other charter members too, but I don't think that I need to do anything more. It's just going to create more. It'll create more dependency on me contributing more. When I'm seeing a lot of people do very, very well, and I want to be able to take a step back and enjoy all this and watch more of you come up. I've literally given more than is necessary, and you can see it's happening all around the world. I mean, people are doing all kinds of crazy stuff with it now.
yes, of course. And by building upon your Twitter space, I'm sorry, I still call it Twitter, from earlier, I have a personal experience to share to you. So every time, like I have been studying with you for the past 3 years, and my journey has been quite a bit wobbly up until now, up until a few months earlier. So I have been getting consistency with the results and I'm getting payouts. But the one thing that I've been really getting close to my heart, like whatever I do, I have to do this, and that thing is keeping my results private. So I'm not telling it to family. I'm not telling it to anyone on Twitter. I'm not posting what I'm getting, what I'm losing. Like, and that thing has helped me so much that keeping your results private is the best thing you can do. So people will not judge you for your losses. They will not appreciate for your winnings. This is a solo sport. There is no leaderboard. You are
What's up,
not
mga boss?
competing with anyone. So I heard it from you, Michael, during the beginning stages of my evolution as a trader, and it has helped me a lot. And I wanted to share this so other people hearing this can can feel me and see that they do not have to post their results or their payouts to the public.
Yeah, that's what I was kind of when I tuned in. I was kind of hoping that I would have inspired individuals to tell the rest of the community if they're comfortable doing it. It's not something that you should feel obligated to do, but the ones that are very open and transparent, I wanted to hear them like you're doing here. You're conveying the importance and the comfort it brings when you don't hold this expectation over yourself, feeling you have to go out there and share everything you've been doing. Somehow everybody in social media feels like you have to show them your tax records, you got to show them what you buy on your credit card, where you shop, what political affiliation you're part with. Like, you're not entitled to that information, and you're talking about your financial well-being as an individual. You don't owe anybody any of that. But as a developing trader, here's the rub. Here's where the rubber meets the road. I promise you, trading will become far much more pleasurable. You will enjoy it. It'll be far less stressful, and you will learn better when you stop holding this over your head that you have to prove to other people that you can trade, that you have to prove that you've learned to be profitable now, or that you are profitable. And when you stop doing that stuff, when you take a loss, and it's going to happen, when these things happen, you're going to feel much more comfortable saying, you know what, I took a loss. It's better if I just go do something else today. Because you're not going to feel that impulsiveness to be, I got to correct it in the weaknesses of the internet.
Bruh.
We're getting ready to go into a new year. You're going to keep doing this stupid shit still next year? You're going to keep doing this dumb shit, appeasing people on the fucking internet that are nobody.
give a shit about what they think? Do you fucking care? Ask Lanto how he gives a fuck. Who the fuck cares? Who the fuck cares whether he's made that money doing my stuff, anybody else's stuff? Who gives a shit? That motherfucker is making bank. He's making fucking money. And ain't nobody on the fucking internet can say otherwise. They can't do shit. You ain't gonna hear me say shit. He just came out and said, fuck you, ICT. I did this with market profile. Well done, motherfucker. There you go. Well, that's some fucking money right there. That's real money. That's shit talking money. He's got his fucking clout. And guess what he's doing? Just walking. Just fucking walking. He could be rubbing it in all your fucking faces. Parading around, peacocking, all kinds of shit. What's he doing? He's just walking it. Walking it the fuck out. He's handling his fucking business. He doesn't give a fuck whether people believe him or not. You think he gives a shit? When he looks at that fucking bank deposit, you honestly fucking think that he's worrying about who the fuck believes that money didn't just go in his bank? You think he gives a fuck? You wouldn't give a fuck. So stop. Stop worrying about pleasing other people. Stop looking for validation from me. You don't need it from me. If you're making money, that's your fucking validation. That's it. You have tax. You made fucking money. You did it by yourself. You follow the logic. You don't need to be the. Can you approve of this? Motherfucker, you making money. You are making money. You are feeding yourself. You're feeding your family. You're putting bread on the fucking table. And you're doing it with a skill set that you worked for. Why? Why are you all stressing about what other people fucking think? Fuck these people. None of these people asking for it deserve it, number one. If they had class, if they had truth, they wouldn't even fucking ask for it. They wouldn't even ask for it. They're the same thing as these drug addict motherfuckers that sit on the corner of the fucking road that are pretending they're fucking homeless. They're sitting in a welfare Section 8 fucking housing, getting fucking rent for free, panhandling, making $1,000 fucking days, $1,000 a day, and shooting up fucking drugs and going doing the same shit. You're feeding these addicts. You're feeding these motherfuckers. They want to see you dancing around. Fuck them. This is your company. This is your fucking money. This is your legacy. This is your fucking lifestyle career you're creating. You're not out here trying. When you started trading, when you started to learn how to trade, you didn't say this is part of the reason why I'm doing it. I want to tickle the fucking ass of everybody on X. They're all gonna fucking love me. Man, it's gonna be a great circle jerk. Fuck this bullshit. I can't do nothing but please everybody else. I don't care how much money. I want everybody to love me because I can bring this much money and this is how many times I lost. And tell me how well I did. Fuck you. There's your answer.
This is what's been missed in today's space. I love that, Michael. I love it. This is so
You had the dad Michael. Now you get the brother Michael. You get the bro coming in here and telling you.
I love both Michaels.
Oh, I love it. Let's. I know Michael is taking some deep breaths right now, and we got a lot of hands up. And Market Oracle, thank you for chiming in, being here. We got, I want to hear from Mauricio, but we got Focus with his hands up. We got Alfred with his hands up. We got Hunting the Wick with his hands up. And it's pretty much a mic drop moment. That was as real as it gets. So we'll go Focused, Alfred, Mauricio, and Hunting Ticks.
Yeah. Wow, that's, man, 100%, man. Follow, just turn out the distortion. 100%, he's on point with that. I pulled out my journal. I've got some thesis questions that I've come to over the past 5 years, and I wanted to kind of just touch on a couple and see if I'm on to something, if I'm looking at something correctly. Okay, so every time I'm looking at these fractals, right, it's applying across all time frames. So I, for my own guidance, start on a 12-month because it's an open, high, low, and close situation, and that data enables me to be able to look forward. Because I understand where the liquidity is, what was the relationship to the previous candle or the previous 3 candles, because of how the imbalances and expansions are created. So I'm always looking through that lens fractally. And I break it down, and I'm constantly seeing these AMD cycles across these, like a 5-year time to a 1 year, and then how I can gauge the manipulation to be able to decipher how far the expansion will occur. And I resorted over to, like, if you pull an arrow back, it determines how far it can fly based on its trajectory. So kind of adding that with these cycles, and everything is an M&A clean cycle, like everything, right? Like you were talking about, since I'm always looking at these specific fractals, right? That high that purges liquidity or maybe takes previous year's high when the imbalance is created after that first displacement, the first fair value gap that appears after the change in the state of delivery, that can be utilized as the inversion because job's done, and now fractally will start rolling over, whether you're applying that on like a 1 hour soup situation or a weekly soup situation or a daily, like whatever the fractal may be. So and you constantly are using this phrase of stair stepping. And I have some questions, so I'm just kind of trying to lay some groundwork. So when I'm looking across these fractals, for instance, like on a yearly time frame, and like how this previous year was going to expand, taking the low of the previous year on a monthly, there was an order block of 50%, and that was in April. So then we're coming out of first quarter, right? And like as we had talked about in our first conversation, like that was that week of the accumulation, which was an inside bar. So I'm always seeing this run on liquidity and then an inside bar. Like, that's interesting. Whether I'm looking at it on a 30-second time frame or looking at it on a monthly time frame, I'm seeing that same fractal delivery holding true. And a daily inside bar is always, for me, very powerful because that's accumulation, and expansion comes after that. So I'm seeing these fractals develop and can anticipate based off of the building of that fractal from the 12-month to the 6-month to see, okay, what's this order likely to do into the months? And each month I'm grading, looking at what is the low of the previous month, the high, and the 25 and 50%. And I'll notice those levels continuously get used in the upcoming month because it's the value, right? Anything above that is expensive. Previous month's 50% is kind of like an EQ, which is a profile of where that sequence happens, right? The accumulation of those orders, I call it the razzle dazzle, and then run one side, changing the state of delivery. Now buy side of the curve is engaged, and you can start utilizing that entry fractal model of that first imbalance, or if it's a breaker, like you say, if you don't utilize that inversion with the breaker, then you can utilize the breaker, or you start using the imbalances as they're occurring in that buy side of the curve because you're using the order blocks and the imbalances now to run for that new liquidity. The stair stepping as it's moving from those fractal deliveries, and I've been noticing it based off of time first off, right? So I'm looking across the horizon like I would on an hour, knowing that at the end of the hour, there's the macro, right? So if I'm looking at that across the same fractal delivery that I'm applying to like a monthly, I'm seeing like a monthly macro or a time or a date when the spooling, or as we say in the macro, is a set of instructions that are to occur, which is it should run for liquidity or it should run for an efficiency. So I'm seeing that fractal holding true on those higher time frames by applying, well, that's a macro is occurring at 83% of the hour. So if I go and I take a GAN box and start applying that across different fractal time frames, I'm seeing that hold true. And I can see the previous month was an inside bar, then it starts to, all these little pieces start to connect back together, and the language and the description of how that phenomenon happens, like, you know, I've internalized that where it's not like I'm learning a fair value gap because ICT taught a fair value gap. It's like, no, it's describing that narrative action that's occurring in the fair value gap, which is the language that you are picking up to try to give that narrative life. So you can say, this is the thing that's happening, because specifically you can't say, this is what's happening because of, for whatever reason. So you have that language that you're trying to transfer to us. And I'm seeing the same fractal, whether it's in an EKG made or clouds or, charting like scientific models of solar flares or ice ages across the years and the carbon in the atmosphere. Like, I'm seeing the market maker model on everything. Like, it's not like it's anything different. It's anything that's changed, and that's what initially sparked the idea. Well, maybe I can fractalize that too if I go from the higher time frame down or up. And so now I was able to this year, through my anticipatory skill set, understand where the low of the year should happen based off of the yearly fractal, and then projecting if they manipulate it down, how far could the arrow fly, which is what we were able to hit coming into the yearly macro of October 30th, and now starting to get this distribution to the downside. So, like, am I onto something, or am I stretching something and beating the candles into making them, as you say, submit to what I'm seeing?
Well, I can't state emphatically that I was able to follow everything you said. It's a lot, but I heard enough to know that what you're doing is outside the scope of what I do. So if you're finding any truth in that, you're finding on your own work. So, if you have discoveries and it holds up over time, you might have something that's entirely isolated from me. It doesn't sound like anything that I apply personally.
Okay. So, like, the first presentation, right, like, of those time cycles and how they can help determine, like, if you were looking at it through schematic, like, what schematic would print, where's the buy side, the sell side, maybe based off previous sessions, right? So that's kind of determining or giving us a deterministic idea of, like, what's the model that could occur, right? Say you're looking for downside delivery in bearish days, right? So you're looking for, say, like, only 25% of the previous daily candle to be traded to, for the market maker model to continue to the downside, right? So, like, whenever I'm in the first presentation type of idea and stripping it from that time model, like you were giving us those opening range times, and then looking at it through, like, a monthly perspective or the weekly perspective, the first imbalance is created on the week. How is that utilized in the creation of that same schematic that I'm finding on a 1 hour candle, looking at it through a 30-second time frame? And seeing those same relationships that kind of still hold true because of the market dynamics and the creation of those impulses, and then the breaking of structure that then creates all the different PD arrays that we can start to utilize, and how price stair steps from, like, the big figure down to the 20s and the 80s, down to the low at the other big figure, to then start to get the market maker buy side of the curve that starts to occur, and then how those certain type of soups, low risk buy, and then I call the lazy interbank trader, but that last movement before it starts to get above premium of that implied dealing range, uses that stair step, and with time, like, they both align. So, like, just taking that same idea and transitioning it over, because you said it one time and I kind of ran with it. There's nothing new under the sun, that these fractals continuously repeat. So if I could see it on the 1 hour, because that's what I took as a personal mission. If you trade the 4 hour and the 1 hour as a daily chart, a whole new world opens up to you. So I like, well, if it applies that way fractally, what if I take the monthly chart and apply it the same concept as I would on a 30-second chart under a 1 hour candle viewpoint, but doing it from a 1 month and a daily viewpoint, and I started finding a lot of the same truisms that existed.
Yeah, now we're talking my stuff. But when you started talking about GAN and putting a GAN box or something like that, we just left the conversation. I don't know what you're talking about. I'm not trying to be funny or anything. This is simply when other people's work gets placed into my stuff, I'm not going to be able to speak as purely as possible with my own work, because I don't want to defend things I already shunned myself, and I don't know what work you're doing either. So I don't want to try to sound like I'm invalidating your discoveries, because you could very well be discovering something that's new, fresh, and who knows? Who knows that it may be equivalent or even better than my stuff. I can't say or argue that case, because I'm in a position of ignorance. I don't know what you're doing. But, like, I was a little alarmed when you mentioned GAN, because we don't do that around here.
No, sir. It's a tool. Like, I'm not using it anything. Like, I just be able to see delineations in time. Like, if I turn off everything, but it just shows me, okay, from here to here, where's 50% of that time, or where is 75% of that time? Like, that's the only thing I'm using it for, is just to be able to gauge, like, time. But everything I do is based off of everything you've ever taught. Like, that's all I trade through is that market maker model. So it was just a tool, like a fib. It's just a tool that, like you say, and when you're rating gauge, it's not the numbers itself are giving you areas of gauge that you're already looking for things to occur because for market maker models, that's not. So it's just the tool that I was using, but I'm just the truisms that I'm finding across these higher time frames and how you were presenting these time-based models utilizing, like how I said in the first conversation, how I would really seatbelt myself or strap myself to that first presentation because I know it's giving me insight into something. And if I can look back and see, well, where was the liquidity? What happened? What are we looking for? Is the weekly expansion? Where are we at in the week? Like what, where are we at in these time cycles, so to speak? But I can anticipate that. And I was just finding a lot of these truisms that are holding across a lot of these different time frames that is very interesting because I'm seeing that across, like I said, like market maker models when I'm looking at EKGs or when I'm looking at,
So focused. I hope you don't mind. I just want to interject here. What I heard him say, and I don't know if there's any point or elaboration to this, but are there higher time frame macros that you were referencing? Focus. If you said a yearly macro, what's that?
Well, so like I was saying, if I just carried that again, just technical studies, right? Like I don't know anything, but I'm willing to investigate it all. And so I said, well, if there's something that I'm finding is a truism that's occurring on this 1 hour chart, and if I just as a tool take something that can allow me to be able to gauge that, so I was like, well, what tool could I use? And I found that if I took the GAN box and I just used that time aspect, I could say, okay, well, what is that gauged over? And it's about 83%. So I said, well, if I take that over to a month and I apply that on the month from the start to the end, it should show me by, a truism, so to speak, like that's the macro of the month, right? And so the same thing, if I took it for the year and I grabbed it and carried it across the year, what would show up there, right? And that was the macro for the year. That was like, so that was this year, what we just came into.
Is that a thing? Is that a thing, Michael? I've never heard of that. I'm just curious.
I'm not someone that does that. I don't have any affiliation in any of that stuff that he's talking about. I understand that there's this pursuit to try to find things and call them macros. And the only macro exists is the 50-10. And if there's any other things that you're finding in price action that seem to repeat, I'm not ever going to subscribe to that. I'm not going to say, yeah, I'm not going to validate it. I'm not going to try to talk down against it. I understand what you're doing as independent thinkers. You're trying to formulate new ideas, and it sounds cool to call it the macro, but it kind of confuses the community. I get a lot of emails from people that they'll ask, is there a macro at this many minutes after the hour or this many minutes, before the hour? And what about this and what about that? And I just want to have this opportunity to be upfront and cordial enough still to say that there is no other macro except for the first 10 minutes to the top of the hour and the 10 minutes past the top of the hour. If you're seeing any kind of price runs that are, I guess, any weight or scope in your own repertoire, in your own tools, that's something other than a macro. You're welcome to call it whatever you want to call it, but when you're amongst all of us as the same community, like a hive mentality, we're trying to have the same language. And it's like someone coming in and saying, we all learned how to speak English. And an influx of new ideas come by way of now French. Okay. And we're all trying to interpret, what is being conveyed here? What are we getting at? And I'm trying to be the good person and not try to be mean about it, but there is no other macro. That's it. It's 50-10. That's it. So if you're seeing impulses in price action that you can time or learn to anticipate, just try to avoid calling it the macro because you'll avoid a lot of confusion. There's a growing tension in the community where they want me to be like a gladiator, smashing everything like I do with other people's interpretations of price action. And I'm trying to be mindful that I don't want to kill the spirit of curiosity. I don't want to kill the desire to look deeper. And I certainly don't want you to be limited just to what I teach. Broaden your understandings, and by learning everybody else's stuff, being familiar with it, you'll be better at what you're using learning from me. You'll see their weaknesses. You'll see that. But there's this pursuit of finding something and being the author of something. Or I created this and I created that. I was reading on Twitter. There's a guy saying that you didn't invent the inversion fair value gap. I invented the inversion fair value gap. Now here I am sitting on the outside as the author of it, and I'm thinking to myself, now younger me would take this opportunity to come out here and act like an asshole, but I'm just going to leave it alone. This is just for the sake of the community. I don't want to have all this infighting. But the point is, if you're discovering something that you're seeing a measurable response in price that you can learn to anticipate, and you're seeing fruits of that, I think you're probably onto something. I don't understand exactly what it is you're seeing personally. I don't know what that is, but I would never want to squash your interest or try to dissuade you from looking at something that might be valid. There might be something there that I'm not aware of. Does that make sense? That you understand? Like I'm trying to be balanced about preserving your inquisitiveness about pursuing your own discoveries, but I'm just asking the community, when they have these little quirky things that they find, try not to use the same labels I've given my stuff, because it causes a great deal of. I mean, if I pan through my comment section, there's all these individuals that will say, I was watching so and so this, and I was listening to so and so that, and I read this from so and so, and I was on Reddit, and they said this and that and other thing. And there's this, for the last year, there's just been growing conversation about macros. Is this a macro? Is that a macro? There is only one. It's simply the 50 to 10. Okay. Now, in that last hour of trading, final hour, you have 4 of them in there. There's 4. Apart from them, that's it. There's no scripts. There's no algorithmic runs in price action. It's just go, 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 baby. And if you know where you're at in terms of the market models, you can anticipate them. What you're describing on these higher time frame charts, I can't answer for personally. So if you're asking if there's any validation that can come from me from that, first of all, don't ask for validation from me. If you get data that supports your findings, it doesn't matter. It doesn't matter what I say. If you can systematically and statistically prove that there's an edge that's forming around the things you're finding, don't ask for other people. Don't ask the input for other people, least of which mine. Because I'm going to be biased. I'm going to say, if it's not my stuff, I'm not interested. And I don't mean to be rude when I say that, but I'm not trying to say to you, don't waste your time. I don't know what you're doing, and you may be onto something. Is that fair?
Focus.
Yeah, sorry, my phone. No, 100%. I didn't mean to collude because I run into that too. People throwing words around because they think they understand the meaning. Like, the macro is only that time, 100%. I just was finding that truism and finding it across other arenas, time frame fractals. Because if you remove the time frame and you're just looking at it, like whether it's a 30-second or a day, like that phenomenon, seeing that, and how, if I'm gauging, say, a break or leg, and I pull down my manipulation, then anticipation of like 2 and 4 deviations of that, like that fractally applied across different situations on previous month and stuff like that, like seeing those things and occurring, because like I said, all I utilize is what you teach. I've turned out, as trading for 10 years, 7 of it has been nothing but yours, because I found it's the only thing that I could truly trust because it worked. And so in my own search, I think it's just been because of my own insecurities that I bring to the market. I want to be perfect, and that I want to find that thing that allows me, that I know, I think it's just my own insecurity, because I don't like that uncertainty of what if, because ultimately I feel like I'll fail, I'll fuck it up. So like there's always this strive to like, I got to figure it out or something. So I appreciate your fatherly advice, and I certainly don't want to collude the community with false verbiage, but I was just finding that truism across different time frames, and was and again, it may just be my search for that security that I feel as a character flaw, but I appreciate you answering my questions.
Don't put down that inquisitive nature. Keep that.
Yes, sir.
Because if I would have put down my own, I never would have got to where I understand all this stuff. I would have resisted it. So there's a balance that has to be maintained by you. You said you're looking for perfection, and that's a goal. That is a goal. Everybody should strive for perfection. Be perfect. Will we ever reach that? No. But it's a work in progress. And if you're trying to aim for that, would someone that's trying to be perfect, principally oriented in what they're trying to do, could they be grossly, misguided by doing that? No way. Because if you're trying to be perfect, guess what you're doing? You're managing risk impeccably. You're trying not to overtrade. You're trying to be very systematic about what it is you're looking for. And you're looking for the strong why. Why are you doing it? Why should it do it? And if you think that way about everything you're doing as a speculator, as a person in general, and everything, you're going to be usually mentally.
Wala pa, boss. Toshi.
So
Wala pa, boss.
I don't want to crush that, and please don't take what I said as a reason to say, well, I'm just going to abandon it all because I don't do that. You might find something that will help you in your understanding about everything as a trader. Most of my best discoveries came for trying to really make something better or look beyond something that already was working, and that didn't get improved on, but it brought a better understanding about another facet I was weak in, and I didn't even spend any time noticing that I was that weak in it. So you're always going to learn, you're always going to get better in your own craft. It's honing the edge. That's you improving. So please don't take what I said here as a means of discouraging you from doing it. Just be mindful about how you use the language.
Yes, sir. And I didn't take it that way at all. It just came.
Good.
It came
I appreciate
across
that.
fatherly guidance and sincerity. So I thank you for your allowing me to ask those questions, because it roots back to me what's been working and continue to explore, but what's been working, and like you had said before, you learned something, you had something that worked in your hands, and then you started messing around with it, make it better, and it only caused you more pain. And that's kind of what I'm striving in an experience, where I just need to slow myself down, take in the data, discover what I discover, but realize the goal is that financial freedom and the wealth for my family and my personal growth in that adventure. But thank you.
I love it. We're going to hear from Alfred coming up. Mauricio, I know, has got his hand up. We're going to hear from Alfred. Mauricio, then Alfred. Just real quick. Throw it in here, Mauricio. You there, buddy? Mauricio. We can't hear you, bro. We'll come back to Mauricio. He dropped off. He knows he's going to come back on. That's okay. We'll pop over to Alfred real quick.
Yo, kid. Long time.
What's going on, buddy?
I missed you so much, man. Let me just get straight into it, man. I don't have any questions for CP. I just wanted to touch on one thing that he said that really resonated with me as a developing executor. And he's like, he's working on building an account, and his goal is to like make 10 grand. And he's like $200 away, and it's a Friday. And he knows he can do this again next week. He knows he can make money, but there's this impulsive urge that you just gotta do it today. And that's a very real struggle. Even though mine was not the same amount, it was a similar feeling where you're so close to getting a withdrawal, and you end up doing more than you should, and then you end up losing everything. And on that weekend, you're spending time, because I'm an entrepreneur, so I buy and sell stuff. I went into real estate, and I'm brainstorming ways in which I could panel money in order to finance an account again, just so that I can repeat the process. And I've always wondered, what was that one thing I struggled with? That one thing, that impulsive urge to just do something. And He said it himself. Like, you have to journal. And these are things that you will never say to anyone. On Jesus Christ. Um, there's this fear that someone might find my journal. And if they read that, whether it's a loved one, whether it's a friend, whether it's someone I really care about, if they read that, they would hate me to death. Not because I mean those things, but those are just the thoughts I had, growing up and developing. These are the things. And one of the ones that I would really love to share with you was that there was a time in my development, not even in my, just in my personal life, where I really resented the people around me. And the one person who was really closest to me at that time was my mom. And she was the one who could take care of me, etc. But I hated her, you know. And then I told her this, of course, I had a conversation with her, but uh, everything I did was to get away from that house, whether it was make money, whether it was small business, whatever it is, just get out of that freaking place because I hated where I was. I hated everything about that situation, and my goal was to get out of it. And I realized that in trading, that impulsive urge to want to get out of a situation is not what gets you out. You just have to slow down and take it slow, one step at a time. And when you learn to accept these losses and you learn to find yourself, you still find that at times where you're close to a breakthrough or you've made a breakthrough, you've made a big win, you just triple down and you lose everything and you have to start that process. And when I sat down with myself, I realized, the hate I have for where I am is what's stopping me. Because every time I get so close to leaving, I fuck it all up just to start again. And there was a time where I couldn't have that anymore. And I stopped speaking to my parents. I stopped speaking to my nieces, my friends, and I just shut everyone out. I said, it's okay. If you guys hate me for that, it's fine. But I can't believe like this. And I think for a month
Check, check.
or two, my mom gave me a call. And we have a normal conversation. We don't really have conversations. And my mom said, one of my greatest fears is that you will leave the same way your dad left. And I don't want to see that. I want to see my son free. Mind you, everything I do in trading, the best thing is to get out of that house, leave her. So my dream, my goal, and aspiration is to leave someone that's so great at pleasing me that it's pleasing her. Like so I really wish she loved me. She loves me.
That's deep. That's
And 100%. And she loves me. And I don't see that. So everything she's doing, she's trying to protect me. She's trying to take care of me. And I don't see that. And after that phone call, this is what she called. Before I sat down and cried, I wouldn't know what to do. And I just cried. I feel like, fuck, man, I've been going about this for long. And from that day on, I've never felt no chill. I've felt the impulse urge to say, put more in trading neutral, put this into history. I can deal with those. But once I discovered that about you, where I hated someone so much, like the lack of will, when you want to get out of a situation, whether it's a job, whether it's a friend, whatever it is, you don't want to be around that person. You get more energy and you don't understand them. You feel like they don't understand you. And you're trying to run away from something that truly feels better way to go. And as I develop those initiatives, as I do better,
Alfred. Alfred, how have you combated that urge? I mean, I think that's very real, very real. Being drained by someone that you love and having somehow adversely affect your trading. How have you managed that?
the best way, it obviously started with my mom. I had to understand that she's coming from a place of good intentions. But there's a saying that the road to hell is paved with good intentions. Meaning, even though she's trying to come from a place of love, her tactics are flawed. So you need to accept that everything she does comes from a place of I care about you, Alfred. But then I just don't know how to tell you that. I don't know how to express that. I don't know how to show you in a way that makes you feel like you're cared about. And when you realize this, it's much easier for you to let go of what she can't do. Like my mom, she
Do
had
do
one
do
job
do do
and her house
do
that I love.
do 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 do
When I was
do
letting
do
go,
do
I realized that it was no longer paying me. How
do
is that? Because as much as I love you, Alfred, those were
do
those
do.
hours not
Possible pa
paying
to
me.
mag ano,
And
reverse papuntang New
because of
York
that
Low.
love, because I understood her, I became more
New
patient
York
with her.
Low.
I started to initiate more. What I realized
But
is that maybe she wants
if
more
we leave
something
a
that
fair
I was
valley gap
chasing, but I
right
couldn't go
here,
far. I missed it. So I just settled there. And then I started moving buildings, just like I did in trading. I went from 5 to 4
I really want the daily fair value gap above as a draw. Possible if we leave like a fair value gap here in that London high, like a 15-minute fair value gap, that would be nice. Let's see how 9 o'clock will open. Tayo na tong sikit. I think 9 o'clock guys, magkakaroon tayo ng long sa top dito. I like the daily fair value gap above us.
we can consolidate going into the rest of the year and not take another higher high. But if we have some kind of, like for instance, let's say we start meeting troops on the ground, Venezuela. Well, they have oil, they have natural resources that we really want. We want to be able to stop China from having access to all these things. So we know that there's China building up all kinds of relationships with Venezuela. They put this Maduro guy in there, and all this stuff supports our real reasons for how we're doing it. It's not for drugs. Look, the United States is the biggest drug dealer in the world. Okay, so they're not trying to save anybody. They're going down there to cut off the access and the positioning that China has because they're literally trying to target. So the ramification is when they're about to choose charts, they're not thinking about. I'm thinking about. I'm weighing of that would act just like another Vietnam. I think we would get caught up in all kinds of bogged down in some garbage, and if they use this to really put a meat grinder together and instill another crap. And I'm gonna tell you right now, fuck you, my kids ain't going nowhere. Last time I saw them, they took a fucking global trip to Cruise Island, where they're at. So I'm personally saying we're done for the rest of the year unless some
Nakasing swing trade, di ako nakaswing trade, boss. Wala pa akong trade position. I'm still waiting.
time in history, look back. Has there ever been a time in world history, American
Boss,
history,
kala ko no trading ka
that we
today.
have had a climate like we have right now?
Titrade ako
World history
today,
had a
pero
garbage. That fucked everything up.
after
It messed
after
everything up.
NFP release, which is kanina. Kanina pa nag-release yung NFP.
Everybody
So,
was corrupt in every government.
trading
Why?
day ko
Because
today.
they're literally raiding the treasuries of every
All
country.
goods ba ulit, EE?
They're raiding
Yes,
everything.
boss.
They're taking whatever they can because they know everything's sinking. Everything's going to sink. And that's your crypto shit too. You're going to see what Bitcoin's really all about. You're going to see what all these cryptos are all about. There's no faith in anything right now. Not to see it appreciate. Who wants to accumulate new longs at these lofty levels with so much uncertainty, such a degree of corruption, not just in the United States, but everywhere? What country's doing it the right way? None. What government has it together and you feel like, I'm going to buy their bonds. I feel safe investing in that country. No way. There ain't nobody. It's all messed up. So I am not of the opinion that we're going to make new all-time highs and keep on blasting off and be bullish. I think we're seeing something very large scale that may be a multi-year bear market, but it could be quite painful. I'm not smart enough and I'm not stupid enough to come out here and say I'm going to time it to the day. I just know I'm stepping the fuck out of the way because I know a Mack truck is coming and I'm not going to play chicken with it and dare to run me over in front of the public or lose money on doing it. It's better for me to step aside and say, you know what? This is just lining up perfectly the time of the year. I take a breather and move to the sidelines, and I'm watching with great interest. But I'm also reminding all of you that we're trying to be active. You got to be real careful. You got to be real careful. They're talking about doing tests on nuclear weapons. Like, come on, man. They're telling you what they're going to do, and I've said it before. You will see tactical nukes used on U.S. soil. Whether it's us doing it, blaming somebody else as a false flag, or another country doing it, you will see that shit happen. Because 9/11, that shocked everybody, messed everything all up. COVID, nobody's going to believe that bullshit anymore. So what's left? What's left? Nuclear fallout. Stay in your house. You can't smell it. You can't see it. And how many of you in the audience have a Geiger counter? How many of you can pick up reds and measure them for radiation? You would know. But they start showing people dropping in the fucking streets, saying, "Oh, look, this is you ain't leaving your house to go nowhere, and Amazon ain't bringing shit to you." So think about that. That's the level of shock and awe they have to do to wrestle people in control again, because they're asking to reveal all the pedophiles in this world, and they're demanding. We're not forgetting it. We're not going to forget about it. Okay? People paid out $3 million, and that person eventually died of a freak accident. They always die. The Clintons come forward. They say, "Well, look, we got evidence against Clintons." Well, shit, their airplane it just crapped out. It died. Now everybody on the plane died. They never have anybody ever say it. Now we're tapping Bill Clinton. What do you fucking think's going to happen now? Everybody's been paying attention. Already knows what's about to happen. Something big is coming. Something huge is coming. And the World Economic Forum, who nobody elects, these fucking clowns are out there running the world, telling policies, but they have nobody. But they have the power, they have the money, and they make shit happen behind the scenes. They're promising you. They're doing this leap forward, and they're promising you that it's going to be disruptive. They're promising you that shit ain't going to be right, but it's better. It's going to be better because it's going to be a great transfer of wealth. You honestly think these rich motherfuckers that run everything, you think that they're concerned about giving wealth? Why don't they fucking give their money away? What wealth transfer are they talking about? The money that we had in our 401k and all of our fucking retirement accounts. I've said this shit before. That's the last fucking kitty to rob. And what they do? Patent it up. They wanted everybody to pour their shit in there. Put more into your 401k. Keep really building up. And then all of a sudden, they're going to rape you, steal, and it's all gone. You got nothing. I got no more 401k. No more retirement funds. Fuck that shit. No way. Liquid. Goodbye. So sink that shit one that's identified all around the world, Warren Buffett, has liquidated everything he fucking has while the market was rallying up, making this high. Smart money does what? They have to offset to distribute their longs when prices going up. That's the only efficient way they can do that. He didn't have a couple shares, man. So if they're doing that, and he put himself below reportable level, that means he can move, and his company can move below the radar. So you're not going to be able to track shit. You have no idea what he's doing. You have no idea what he's accumulating. You don't have any idea what else he's selling. None. It's completely off the radar. He turned his transponder off. You can't track that motherfucker now. Don't you see that as a warning sign?
Yes, I see that. Just, the gap up that we're having, I don't know if you saw last hour or 2 hours, we had a huge run up, 125 points on QQQ, because obviously futures were closed, but he disclosed a huge position stake on Google. He hasn't taken, you were right, he's in cash all this time, but now he disclosed it like a 5 billion investment in Google. And that's why he just, I think that the market is just gonna go up. But yeah, no, I get it. Question, Michael. So if you liquidate all your 401k with inflation, how we're doing, like, where are you putting your money then? Real estate?
I'm not telling anybody what I'm doing.
Mauricio's big into real estate, so he just wanted to know if you were interested in buying property in Miami, he's your guy.
Yeah, I just left Florida. I was considering getting something in 30A on the Gulf side, and we looked at a few properties down there, and some of the people down there saying that they can't keep flood insurance, and they're losing a lot of companies that are no longer sponsoring the flood insurance there, and so to me, it just it's ain't worth it. It's beautiful there, but it's
Thank you, Michael.
Fascinating conversation. We've been here. It's 1:47. So, thank you for being here, everybody, for listening. Thank you, Michael. It's been a phenomenal conversation.
if we could have a couple people come up and not need to have the same thing, I'm going to try to go sit
Yeah.
here.
Yeah, no doubt. All right, so we will have a series of speakers coming on, and it will not be to ask questions. Maybe just, you can ask questions, but we won't have the level of expectation that Michael will be answering them. We will be answering them amongst ourselves. If you have a question or you just want to come up and say anything. So that sounds great, Michael. We've got Hunting the Wick patiently waiting with his hand up. Hunting the Wick, thank you so much for waiting. You're next, buddy.
Hi. Thanks for having me here. Can you hear me?
Yes, sir. We can hear you great.
Hi. Well, that's a shame. I wanted to ask my question. That's all right.
Well, you feel free to ask within the community, and then we can talk amongst ourselves, and we can let the man eat soup. And if you want to chime in, you can. Otherwise, we'll just have our conversation.
Okay, sure. So, well, basically, something was relevant like what happened this week, last week, today. Why highlighting like weekly volume imbalance where like it's part of the bigger race because there is a weekly imbalance, but there is also a FPG within it, and also there is something that is mentioned during the last like live or yesterday and during the race with the time expectancy of getting successful, profitable in the study. And yeah, well, me, I've been studying 2 years now, very intensively. I think yeah, in December 2025, it was like 7,000 hours, and I was hoping like to get to where I want for that, but I'm enjoying the journey, learning more and more about the PRAs and understanding more about price. And other thing is like, yeah, I was wondering like if Michael was thinking about like, um, how can I say like adjusting more like time because he was saying like, yeah, it's more about understanding the timing and price of PDRA or market model buy or sell.
I mean, we've been provided time already.
Yes, more or less all the time. We know the cues goes there. I don't know. It's like
Sounds like you have an insatiable desire for information. Are you able to apply it?
I mean, no information, but I suppose I progress in understanding of science as Michael sharing with us. And at the level of Michael, you might not want to share it totally understand because he already shared enough. But it's like it's almost you know what time price will be what time such and such PDRA will show up. So I wonder trying to ask him too much as well, but if he's thinking about expanding on time, because I'm at the stage where I understand enough theories and enough concept where now is the time element.
Well, here's the thing. Here's the thing. If you're asking about time, you haven't journaled. You just literally told the entire community, and
No,
don't mind my French. I'm calling you out, son. I'm calling you out, son.
No, that's
You
your
don't journal.
assumption.
You don't journal.
But
You just put
I do
yourself
have
on
to journal.
blast
I
by
do have
saying
to
you don't journal. You don't document the times that these arrays are occurring. Because if you did, then you would see the time. You don't need the time. You don't need someone to give you the time, my friend. It's on the chart. All you did is just tell us, all of us, that you don't journal.
No, that's your assumption. But you might need
It is my assumption correct. My prerogative to have that assumption.
I mean, not your assumption, but your understanding of what I said. I mean, it's totally fine, but I'm saying
Well, you're asking for someone else to validate what's on the chart and something is static. Here's the thing: it'd be one thing if you were talking about something dynamic. Time is static, my friend. So when you want to know when a PD array occurs, it's right there on the chart. It tells you what time. You need to stitch together where and how these arrays and time correlate and how they sync together. That is your own study, my friend, within the information that's all the framework, the schematic that's already been provided.
Yeah, I rather understand it rather than you tell me I'm the journalist.
Yes, sir. Yes, sir.
Because
Pretty please, Michael. Pretty please.
Okay, I heard what you're asking for, and I thank you for that too, Elliot, and scarf down the sleeve. But in deference to time,
Tayo na takot sakit.
have you looked at the post I made on X, or I think it was a few posts with Bitcoin? Did you take a look at the chart and the annotations I put up?
Yes, I did see it. I see it.
Did you see the one chart where I actually had these little tiny little lines underneath it, and I was highlighting that's the 50 to 10 macro time, and it was creating the very lows of the Bitcoin going up during the market maker supply side of the curve?
Yes, I did see that.
Okay. So what more do you want beyond that when you apply the things that you're teaching me? From a profile stance, from a narrative stance, reading market structure, all of the things that I've shared thus far. If I stopped talking about time, you have more than enough. I think that there's a pursuit in the teaching part of the internet, which teaching, trading my stuff, other people's stuff. There's this Pandora box that's been opened up about time, and everybody wants to find the right time. The right time is really going to be determined by what you're seeing price action at the time of you in front of the analysis, doing the trade, whether you want to look at the trade or not. And the sessions, the kill zones, macro times, all those glued together to give you all the reference points and specifics about time. I don't have anything else I'm going to provide publicly on the basis of time than what I've already given. And the only thing I'm going to do in written format is this is what I'm looking at this time and why I look at it for this
purpose and this purpose only. And this is what I look at for this, and I look at for this purpose and this purpose only. So that way it's a structured view of it, why I use it, when I look for it, and what is it supposed to give me in terms of insight. How's it useful? But it's already saying things I already taught. Okay, it's the times, and I'm giving you examples. So if you are going to buy a book that I wrote, okay, don't do it. I'm not telling you to do it, but you're going to discover everything that's in those books I've already taught you. It's been given to you for free. It's in lectures. It's in videos. It's in spaces that, like Kit has hosted stuff. I'm answering questions like this. I've already disseminated the information. It's there. I think what's happening is there's this pursuit of individuals that are trying to find something they can teach on and or supply to a subcategory of the community rather, maybe behind a paywall or something, and they want to have a new gimmick, a new little hook or something. And or maybe I'm not saying that you're doing that. Maybe you are seeing that being done, maybe in your neck of the woods, and you're thinking, well, I was going to ask Michael to circumvent the whole need to join this service, but maybe they're touting they have something that's previously unrevealed, or it's part of some horse shit that they said that I'm keeping away from the public that I taught in private mentorship. Everything's on the YouTube. Everything that is relates to time, I've talked about. There's no more further revelation I'm going to provide around it. The only thing is what times I'm looking for them to be influential, and those times have already been revealed to you. The macro, the 8:30 news embargo lifting, the opening price at midnight. These are all static things. They're not changing. The opening ranges, and that one caveat with the morning session, it's being treated slightly different. So I don't think there's a need for anything more. And if you feel like you need it, what have you done with what you already have?
No, I think you're totally right, Michael. You spoke about this thing that is currently like trending, and I'm also a student of so trying to understand or having a deeper understanding of what you're teaching. So it's like just trying to pay attention to things. So that's why I was just wondering. But yeah, thanks for clarifying this. I believe
You're welcome.
I mean, it's clear. And thank you, Keith.
No problem, brother. Love having you on. That was a good question. I like it. We got Chartist with his hands up. Vanessa with
Bendito.
her hand up. Let's hear from Vanessa. Magic Lines. How's it going, Vanessa?
Hola, buenos días, ¿me escuchan? Good morning.
Sí, te escucho bien.
Los saludo con mucho cariño. Happy Saturday morning. This is my first time on a space, so forgive me. I see if I sound a little bit nervous. Am I doing this right?
You sound exactly like I imagined you would, by the way.
Thank you. I'll take that as a compliment. I am a little bit under the weather, but I just wanted to join to connect with people who study deeper behavior of price. And so thank you so much, Kit, for the mic. I approach the market from a structural perspective and focus on motion and not signs. And to me, price isn't even random. It follows like an eternal rule. And once you understand those constraints, everything else is noise. Sorry, I'm also cooking chorizo con huevos on the background. And a little bit late for my morning breakfast, but your work, Michael, has helped a lot of traders look beneath the surface of liquidity and imbalances. And doing my own research, I found that there's a deeper architecture influencing how price expands, contracts, and transitions between states. So for me, the market isn't unpredictable, it's obedient, and I think I've heard you say that a few times before, but correct me if I'm wrong. But once you see the structure behind the movement, the chart stops surprising you. And Michael, I just wanted to say like my respect to you and your work because it has opened a lot of doors for a lot of traders to even consider looking even deeper in the charts. So you make people pay attention to the layers beneath price, and that contribution is undeniable. And I just wanted to show my appreciation to you, to your work, to your discoveries, your hard work for through all these years. And take anybody's time or space here. This is my first time ever on X space, and I do feel a little bit nervous, but I just wanted.
That's okay. We appreciate you. There's a rule called Fight Club, and you just broke a rule in Fight Club, but we love you. Yeah, no, it's great. Thank you. Thank you for breaking our very affectionate rule for Fight Club. You did it very well. So I think it's okay. I think it's okay. So we got Pippi here. Pippi's gonna be full of gems. We got Chartist with his hands up. Market Oracle still has his hand up. We have a lot of folks here requesting to speak. I'm gonna bring you up. Brady, please ask a ask a good question. Can I just leave it at that? Like, appreciate the time you have with Michael. Pretty please.
We got till 2:30, so it's 30 minutes now.
Nice. Nice. And what we'd like to do every. No, it's not your turn. Chartist, you're up next. Chartist.
All right, yeah, is my mic working correctly?
Yes, sir. We can hear you great.
All right, thank you everyone for this insight from the space.
I took a short, bro.
To the question. My question is about
This short is sheesh. This short is bad, bro. It's the baddest short ever.
If so, how might we run the gradient levels on the
It's the baddest short setup ever, bro. Yeah. This is BS.
Translate for these shorter time frames, and if this concept can indeed be factually applied to these other time frames, are there specific hours or periods that should be intentionally excluded from the data range calculation, like maybe a period of time distortion or something like that?
That's a great question. It's a great question, Chartist.
Okay, short and simple answer is the 20, 40, 60-day look back is specific to daily ranges, and it is not fractal in the sense that you can apply some kind of a look back on the lower intraday charts. So you can save yourself a lot of worry and concern about that. But there's no application. At least not from my perspective. I don't do it that way. You're looking back last 20 days because it's simply just 1 month of trading. No weekends, Monday through Friday, 20 trading days on average. And then 40 days is what? The average of 2 months. Not perfect, but that's what it is. And then 60 days is just simply 3 months. That way you're looking at the quarterly effect, and you're constantly measuring the supply and demand factors that move inside of all markets, commodities, energy, all this tug of war where all money flows.
Commodities.
So by having that macro perspective of 60 days, you're always at least incorporating the last 3 months of trading in all intermarket relationships. And there's no intraday aspect to the look back.
Commodities.
Great question. That's a really good question, buddy. Good job.
Thank you.
Pippi B, jump up. You got a question? You got your hand up? We got about a half hour left with Michael here, so we'll be bringing folks up quick to the question, if you don't mind. 26 minutes. Yes, and counting.
Hey, what's up, guys? How we doing?
Fantastic, buddy.
All right. I got 2 questions. They're very quick, though. Very quick. One question is in regards to macro, right? Are there any specific macro times for the Asian session? That's the first question.
That's a good one. That's a good one.
And the reason why I asked that is because the Asian session has been more active of late, right? And a lot of gravitating towards the Asian session, and for people that work, the Asian session works for them. Of course, with the London session as well. But I'm just curious if there's any specific macros in the Asian session. So that's the first question, and the second question is, what are your views on
Pangit ng short na yun.
the Russell?
After taking out New York High, I took the short
So I'm just curious about
kasi I thought it will rebalance this 15-minute gap. Pangit naman nun. Alright. Alright guys, 9:30 open in 5 minutes. I still have one bullet for today, bro. I'll be there, I'll be there. Though we're far away, I'm here to stay. You are not alone, you are not alone. I'm here with you. Though you're far away, we're not alone. I'm here to stay. You are not alone.
Thank you. I appreciate that. Thank you so much.
Keeping it going, Gady Trades. You're up, buddy.
What's up, guys? Can you guys hear me?
We can.
What's up, Michael? Thank you for everything. I don't want to waste anyone's time. My first question is, um, how much weight do you put on the dollar's intraday price action, say on like a 1 or 5 minute time frame, when you're watching the morning session? If there's a lack of correlation, meaning if it's meant to be risk off, but maybe both the dollar and the Nasdaq are moving lower, how much of a red flag is that? That's my first question.
Wait lang.
Because it's a very thin market and it can be exaggerated. A lot of the 1 minute inefficiencies or volume downs, you'll see a lot of volume downs on the chart in dollar. It just is it's too much.
Yeah.
So I kind of like smooth that out by going up to 5 minutes. And the importance of where we're at profile wise in the daily chart, where are we at? Are we looking
10 seconds left.
larger scale weekly buy program or sell program? And keeping in the vein of that
2, 1.
whether or not
Boom.
these types of occurrences in price action in dollar should be elongated or
I
are we
think
sort of
tataas
moving
tayo.
outside between
Daily fair value gap.
if you look at what we've done for
If tumas tayo dito, then
been in a range for
I think we don't have a trade anymore.
into a 5 minute chart, it seems like it's doing a whole lot of stuff. It really isn't moving a lot. But the forex pairs for a while will be moving a lot more in comparison. So that's the first thing you have to at least reverse. Because if you're not considering you're going to place 2 months on the reverse support or negate the idea of the front end indices going towards. So say we put that if the dollar index is in a trending mode where it's moving and it's going to
Yeah.
continuously keep moving, not
I think
staying
that's it,
in a
guys.
locked range
We
like
already
it is on the daily chart.
draw towards
If
this
it's going to stay
gap.
like that, then I'm going
So I
to
think
demand
no more
on
trade
an
for
hour
us.
chart, not a 15-minute chart, not a 5 minute chart. I want to see something really be negated intermediate term intraday time frame.
Yo, na,
na,
That's honestly a perfect answer. Thank you. I have a second question, if you don't mind. It's actually about journaling. I've been with a creator for quite a long time now. I have been journaling for a very long time, but I am very, very OCD when it comes to wanting to encapsulate everything in my trading day, and I just can't seem to find, like kind of balance or like a almost homeostasis where I'm able to write down everything that I want to be able to write down for that day. I don't know if you have any tips or advice on journaling and maybe just like the main important things that you want to keep, just to make sure I am keeping track of the most important things. And I feel like I am for the most part.
Can you
But if you have any comments on that,
could you give us list like maybe 5 to 10 of the things that you feel are the most important things that you're concerned with? I'm not asking for your commentary. I'm not asking for the things that you build yourself up on a personal level. I'm saying in terms of annotations, what do you gravitate to from 5, this up to 10 things? It doesn't have to be 10 things, but what are you finding yourself doing?
Well, I key highs and lows or imbalances that I think could be relevant. So I usually just label them as like just whatever's in close proximity that I think could be in play, whether for a move higher or lower that day. And a sort of pre-market plan, just like I like to go in with a certain idea of what I would like to see, and that doesn't always unfold, but if it does, it makes trading really easy. Sometimes you're just able to anticipate, the whole morning session, and it just plays out like that. That's all pre-market, and then after that, what I like to do is I usually just journal if I take any trades, or if I miss any trades, I'll go back and annotate the setups. I have a very specific model, so I usually just journal the model and what it did. But then I notice like other things, that maybe seems to be missing. Like I don't know if they're relevant to put in. So usually what I put in my journal is the PD rate that was used for entry, the time that I was used to enter, the move that I was anticipating, and the target I was expecting to be reached. I do use standard deviations in my trading, so I want to see if I was, just aiming for something too high or too low. And then my main journaling is after trading. I usually just mark up the morning session and basically what it did. So to list a couple of things. For example, if we had a time distortion and maybe I was anticipating a move to occur, but then it did not really occur, I would just say, well, maybe the time wasn't right. And although it's not always clear at that time, maybe later in time when I go back, I can maybe identify like why the market was not moving at that time, waiting for some sort of, whether it was news or something. Any key PD ratings, I like to just focus on the imbalances. So anything that I thought was relevant, maybe a discount or a premium, obviously depending on what side of the market it's moved. And then also just, I guess, also the lunch session as well. So same thing for the morning. I postpone it until lunch because I do find a lot of the time the move I'm anticipating to happen, in that silver bullet hour or going into 9:30, it'll get postponed to like 11:30 or 12:30. Usually when I'm not anticipating a move. So then I have to, annotate the lunch session and say, okay, well, I was right about, the general direction, but the timing is off. I don't know if that answers your question.
Putting anything that relates to the opening range and the disparity between what prices looks like river trading apps and watching the trading apps.
Yes, I do have the opening range gap. So in terms of levels, I always mark up the opening price at 8:30, 9:30, and midnight. Any close proximity, new day or new week opening gap, and the opening range gaps. Those are the levels that I use personally every day.
6 o'clock.
Yeah, that was what I was going to say and suggest if you want. Everybody should have at least those things every single day in their daily chart. And the majority of journaling should be how the daily chart used that very information to create the open, high, low, and close of its daily range. By doing this on a day-by-day basis, you're saturating your understanding of what prices are day by day. And it's in your mind during that day because you recorded it, you spent time looking at it, you annotated your chart. In terms of the initial question or concern you had, the idea of making better use of your time, not trying to do too much, what things you should do, what things you shouldn't be doing. I think that each person's going to have a question. How you can determine that the number one thing that comes to me, like how to know if I'm going to be a buyer or seller for the day. And the way you get better at doing that is through annotation and logging how that daily chart formed its low and its high. You're bullish, you're worrying specifically about annotating where the low forms. When you're bearish, you're worrying specifically about where the high forms. How does it form? What PD arrays is it from? How did it engage the opening range gap? If there was one, how that daily chart formed its low, its high. You're bullish, you're worrying specifically about annotating where the low forms. When you're bearish, you're worrying specifically about where the high forms. How does it form? What PD arrays is it from? How did it engage the opening range gap? If there was one, if there isn't an opening range gap, what did it run up through or to before making its move? So your annotation should be focused primarily on answering confusion or doubts around something that you don't have a complete grasp on. But having the signature concerns that we talked about, the opening range gap, key opening prices, the quadrants of the opening range, and electronic trading, if you haven't paid attention to the lectures and show what I'm doing with my students, if you're not paying attention to regular trading hours, highs and lows are, see, when you look at just electronic trading and you wait for the 9:30 opening bell, you're going to see nothing in terms of the disparity between where it closed previous day and where we're opening at 9:30. It just looks like nothing's changed. And you won't appreciate the previous day's regular trading hours, highs and lows, where liquidity is resting. The overnight hold idea is if you're going to refer back to the same reference points that's in the regular trading hours chart. So by having where you're at in the opening during each quarter, where is the relative equal highs, relative equal lows, and singular high and singular low in close proximity to the left, at where the
How
opening
could this
if you don't
be?
have the chart
You're
yet,
not
you are
even
missing that piece of that puzzle because that's what's running many times. And you see these guys getting blown out on
goodbye.
live streams, and you're like, man, because
Oh,
they're not looking at the
oh,
my signals, they're not going to see
and
their
I'll be
names. But many times I'll pop in
running.
and I'll say, pull up your trading. I'm trying to coach them, like, look, you're not seeing everything right now. Go to our trending chart.
I'll be
So if you're not
there.
having at least the regular trading hours chart
I'll
freaking
be
out, then you're
there.
not ready. That's the thing.
You're
Getting
not
screenshots of the
alone.
annotations and
You're
then
not.
recording what the opening price was
I'm here with
at 9:30 Eastern
you.
time. That's when
Though
electronic trading hours begin
way
again.
far
You won't
away, you're
begin to
not
see how
alone.
that first hour
I'm
trading
here to
in the
stay.
AM session creates the low on the down
You
day
were
and it becomes our
not
updates and the highs in the down days. So
alone.
you can make this into rocket science and integrate yourself, and then you'll get burnt out and not want to do it. But these are the things that I think that every student should be doing. And even someone that's consistently profitable should be doing this as a general practice every single day because this is the meat. Like this is the meat and potatoes of what you're trying to do as a trader. The information that you're looking for, the answers to all the things, the questions, the mysteries you want to have solved comes from having this information logged, becoming used to it, and then you see the rhyme and reason. It repeats the same logic is always being utilized. These same reference points. Is this how are we working towards creating a daily range? And each day is going to form slightly different, but it isn't such a wide disparity between the variations in it. It goes down to the lower part. It doesn't fully close it in, or it closes it in entirely, and then that's the low of the day. Or it'll run through the gap low, and then do 2 times opening range gap low, then create the low of the day, and then work back up and then you have the PM session using the opening range upper quadrant to support bullishness going into the close, and then you have this explosive run into the last hour trade. You can discover those things after journaling it, and you'll see they repeat. They're not repeating every single day after day after day, but you'll see, oh, this is exactly what it looked like when I did this before. They have the same playbook all the time. It's all the same things repeating over and over again, but they slide them in and out. Unless you're looking for it and logging it, you won't become accustomed to it to notice the pattern that's being replicated many times in a month.
Thank you. That was absolutely amazing. I don't want to take too much of your time, but just to follow up on the journaling, not that that wasn't exactly what I was looking for. I know you said on a recent mentorship, I don't know if I was watching all stuff, but you talked about positive reinforcement in the journal, rather than like saying, oh, you did this poorly because your brain just naturally will click with that better. What does that exactly look like? I don't know if you can kind of elaborate on that just quickly. Like, what is in terms of like wording the words in your journal?
Yeah, positive self-talk. Did you listen to the X space that I did today?
Only about the first half, but I did hear you brush on about it. Yeah.
I used an example of it where I said that I'm not in the opinion that we have to view ourselves as being good losers. You have to
Yeah, I remember that part.
And I said, instead of saying that, it would be better used to support ourselves and basically encourage ourselves as a cheerleader to say that I am permitting myself to be I exercise my right to be imperfect. That way, it's very liberating. It doesn't come across as critical to your subconscious because your subconscious is a big filter. And what happens is a wonderful research study that you can
hugely beneficial for psychological reasons, for understanding yourself, other traders, is looking into the power and influence of self-talk and negative talk. Because what you do is you charge your subconscious, which is an amazing filter. And if you train it to look for positive things, it's very hard for you to get stressed out. And when you buy a brand new car, you love your car, it's wonderful, and then you're angry because everybody in the area bought the same car you now have, but they didn't. They've been out there, but because you bought it, you activated a particular activating system. So your subconscious has said, I really like my Dios. I really love it. I really love this color. I bought it. I love this car, and I want everybody to see my car. But what you did is, if you opened up your subconscious, so now you want to see your car everywhere. So is it hard for you to find your car now? No, it literally leaps out of the and you think you're seeing it all the time. Now all of a sudden everybody bought that car, when in reality you just changed your perspective. Now what do you think happens when you say, I think my wife is cheating on me, I think my spouse is having an extramarital affair? Anything that they do, you're going to suspect is supporting the idea that their infidelity is actually underway. They may not be doing anything. You see the power in that? It's double-edged sword. You can make yourself extremely powerful in perception, but you could also set yourself up for failure by giving yourself toxic thinking. And an example in this trading would be, you're looking at something in price action, and maybe you're chasing, and you think, if you are looking at fair value gap that may support price and there's discount sensitivity there, and you anticipate creating another price run higher, but it doesn't, it trades through. Or what do you have? You have an opportunity to exercise this concept. You go in and you report that. At the end of the day, you say, okay, at this time I was watching price action, and I was surprised that this fair value gap didn't hold. But this is an example of why we have to use stop loss. If I was going to buy that, my stop loss should be here, and I only would
It was interesting what happened here.
and that's a positive. I had a limitation and I didn't trade aggressively or at stop loss. You see what that just did? You identified something as you thought it was going to behave a certain way, but then you gave yourself permission to be imperfect. You didn't criticize yourself, and you looked at it as a discovery. That I was surprised that this one didn't hold up, and I only would have lost this much if my stop loss was where I placed it based on the concepts that I'm learning how to use, and that's a plus. That's a good thing. I didn't trade without stop loss. I would have not traded without stop loss, and the criteria fits the model in my parameters.
That's perfect, actually. Thank you. That answered all my questions.
We got time for one more. We got Rick Free, Flocka here. Flocka's got his hand up. Rick Free's been all up in my DMs. So jump in here, Rick Free. I like your question.
Hi. Hello from Malta. The question, I'll go straight to it. CDDR. CDDR, Open Range and Cloud. That was a concept taught by Michael in the for mentorship and down in the chapter content. And I don't think he explained further about that over the years. The thing is that the question I have is that the concept works in indices. Can you hear me?
Yeah, we can hear you fine, bro.
The concept works beautifully even on indices. Michael gave some instruction on the ranges, numerical ranges to use, either if you use the South Asian range or the CBDR for forex and fixed terms. Try to convert that into points for indices. Doesn't work. And finding all the conversion and searching on the internet doesn't work. Plus, the NQ ranges compared to forex is so much wider. And I give my own indicator to basically explain.
Oops.
For those three different ranges, of course, part of the standardization. You look at them in HINDSIGHT day in, day out, day in, day out. The precision is insane. But without the discrimination multiple instances of those indicators on TradingView. So basically, those the job, manually trace all the standard deviation of that. I can let's say I have the indicator with the CBDR for Tuesday, and then I use the Asian range for. I'm a bit struggling how to really use that on indices, but I can see inside that the precision on the standard deviation is good. I'm just struggling with the concept, and that the concept was not developed very much over the years. That's it. That's it.
By who? Go ahead. Go ahead.
I honestly didn't hear much of anything I could bring a response on. I'm sorry.
Yeah, Rick 3, you were breaking up. I think his question has to do with the CBDR and those time-based ranges and how they are relative to the indices. And if you have further insight on the specifications that you provided within the Forex with the range greater than 40 pips or less than 40 pips, greater than 20 pips, criterion for content month 8.
No, I couldn't give a fair response with what's coming up here, but I'll tell you what, that's fair. When I come back in February, I'll start off with things like that. That's fair.
Yeah, that's great. I think that's great. I think that's great. That's great. And it's 2:30. We hit our time. And I just want to say from the community, Michael, thank you for being here. And I want to definitely be respectful to your time and just eternally offer gratitude from myself and all the other speakers and all the other folks who didn't get an opportunity to speak. Thank you for being here. Thank you for utilizing this platform to communicate with the community. So at 2:30, unless there's anything else, I think we're going to leave it here.
Awesome. Have fun. Take care. Be safe.
Thank you. Peace out, everybody.
Boss Ali.
Boss. What's up?
Boss.
What's up, boss?
Stop
Dalang waya ma. Boss. Boss.
Boss. Ano na?
Tap yung dalawa eh. YM lang ang madino.
Ganap ako. Talo ko sa Talo ko kanina isa.
YM, boss.
US30.
Stop
May news, di ba? Last G's.
Wala na.
Boss Ali. Meron po. Alas 11.
Sure kayo?
Orange.
Ay, orange yan.
Yes. 8 minutes.
Red nakalagay dito eh. Sa trading view.
Okay. Oo nga, no?
Pero sa Forex Factory orange.
Orange?
Oo. Orange.
Yan. Suntakin natin yan. Spartan tayo. Patatapang natin mag-trade eh. News. Ako ang ilagan ng news.
Gag.
Tingnan niya. Magre-raise ako atang $1 million ata para magpasa na to.
Laka na equity yan.
Nga na boss, equity edge.
Tamad na ako eh. Tamad na ako mag-engine talaga sa totoo lang. Balik-balik lang yung equity curve. Positive, drawdown, break-even. Positive, drawdown, break-even. Gal. Tangan na nito.
Pag-aas ng mga equity mo eh. Equity ko. Ang ina-choppy talaga.
Kailangan na itong mahatulan na ba? Ayaw.
Hirap,
lang
no?
ulit tayo. Gatalo. Uy, parang na si Belfort na naman ah. Ba, hindi ah. Ay, doon mga tao ah. So, ano to? Monday hayan pa kayo na ito. Wala namang continuation brand.
Para papa, love ko to. Love ko to. Oh, love ko to. Oh, love ko to. Love ko to. Nabuang na.
Dark Manila.
Love ko to. Ano ba't ganito yung screen ko, men? Sira na.
Is tayo 2%. Ang magandang
I will lay me down, lay me down, lay me down, lay me down.
Let's go! London Lot.
Lay me down. Lay me. Lay me down.
Ito mga unggoy. Parang bulbul yung puta.
I will lay.
Gusto ko mag-magic dito ngayon eh. Parang gusto ko tong turtle soup entry na to eh. Parang gusto ko tong birahin eh oh. Top take. 3R din to boy. Kaso wag na. Napatayin din ito.
I will lay me down, lay me. Paldo na ba, boss? Wala pa. Zoilok ko. Si Shayon to ah. Lay me down, lay me down, lay me down, lay me, lay me, lay me, lay me down. This one's for you, this one's for you and me, living out a dream, we're alright. Gonna try to short.
Tayo full point. Tayo na kasi na-equity. Yan, kaka-content ko lang. Gahanap ka na naman ng content. Mababad na nga tayo eh. Pag-ina yan. Baban na tayo, boy. Boss, na-strike na naman ako. Diba? Nasabi ko na ba sa'yo kanina?
La, boss.
Na-strike ako eh. Sabi ko na ba sa'yo kanina?
Wala pa. Ngayon lang.
Yung pangalawang. Ay, hindi. Yung kanina pa.
Wala ata eh.
Bali, dalawa na. Dalawa na lang.
Bali, ano na? Second warning na?
Hindi, di ba una initial?
Oo.
Doon ako sa pangalawa. Di ba dalawa pa daw? Parang apat siya eh.
Warning, tapos first warning. I mean, warning, tapos first strike, second strike,
Oo,
strike.
strike na ako.
Dalawa na lang yan.
Dalawa na lang. Pag natsyempohan ng mga unggoy ito, no? Bad na to. Ayop. Oh, shit.
Pag ganun ba, walang feel? O talagang strike na talaga?
Wala na yan. Parang dire-diretso na nga yung strike eh. Kasi nung wala pa naman akong strike, kahit naman re-report ng mga unggoy, pag ina-feel ko, binabalik. Nung nagka-strike kasi ako, kasalanan ko rin naman ko ba't ako nagka-strike eh. Hindi ko na-check yung content maigi na pinagawa sa akin ni Jan.
Talaga naman.
Doon ako nadali yun na. Kada report na ng mga unggoy, yung isang report na hindi naman same content lang, hindi kasama akin ang content ko eh. Nagkaroon na ng strike. Kasi strike na naman din. Nina. Ala Yan, bukas na 10 a.m. 10 a.m. PO3. Let's go! Okay lang.
Kasi na yung cases sa lang ang TikTok mo, no?
Ha?
What? Okay, so open
Isa lang yung
above.
account mo sa TikTok.
Okay, isa lang. Pero ang sabi nila, yung mga pinopromote daw ng mga contents, yung binabayaran mo sa TikTok promotion, yun ang kahit i-report. Hindi daw na, ano, sa bayan.
Siguro pinalik, bayad. Kahit i-report yun.
Na as promotional.
Oo, kasi may bayad eh. So, automatic may money involved talaga.
Ang inang yan, but sana consistent na yung payout, pwede eh. Pag nag-content ako, 2 contents a day. Kahit mag-content ako kahit magbayad ako ng tig 50, dalawang video, tig 50. Ang ina, 700 na din yung sa isang linggo.
DJ ako.
Na yun. Gusto ko na yun, boy.
Okay, guys. I'm done trading for the day. Dalawang loss. Dalawang loss. I was bearish for today.
Sa brand, sa mga bayad sa brand sa kanila.
And I got stopped twice. Mali.
Na ganun gagawin ko next pagka malago na yung followers ko, boss. Mangingi ako ng monthly na pang at least one.
Mali.
Monthly na pang
Alright guys, I'm done.
Bayad galing kay
I'm done.
Kahit 3,000
Alright.
2,000 pesos lang, matipid mo na yun eh.